Hey, good morning, traders. I promised you all a midweek update if price action did not go as I anticipated in my last video, and it has not. So just a few minutes ago, I posted a chart and along with some notes on the recent Bitcoin price action, and you can refer to that if you prefer reading versus watching these videos, but I know some of you prefer the videos, and so I'll go over the notes that I posted and provide further details and possibly maybe some clarification on some points. All right, let's jump into the charts and we'll take a look at Bitcoin. All right, so here's our chart. I'm going to shrink this down. Remind me to go back to that. If I don't cover it in this video, I will try to remember. But if I don't, then I'll post it in a comment below. This is a bullish indicator that I want to cover that I did not cover in my typed out post. All right, so Bitcoin, you'll see my chart has changed a little bit. I'm trying to clean it up a little bit so it's less noisy. I had previously up here somewhere a zone which I kind of expected us to traverse in over the next few weeks, and we have not done that. In fact, we've dropped below our 0.618 Fibonacci and the 100-day, which is pretty significant. Bitcoin did not ascend into that price zone that I expected. The bears were impressively strong during this last drawback. So now we have to reanalyze our charts based upon the new price action. And I want to observe some key items here that I think are important. Some of these are additional bearish items that we have to factor in to our formula, if you will, allowing us to perhaps see a little bit clearer the picture of future price action. And some of them are actually bullish flags. One of them is the new one, this chart up here, which I'll go over in just a bit. But let's cover all of the bearish indicators first. I mentioned just a few already. So in addition to us dropping below the 0.618 fib retracement, our 50 and our 100-day moving average, we're deep into this. Let me zoom out here. What I call the FUD zone. All right, this whole red flag here. All right, so again, we haven't invalidated my head and shoulders pattern yet. If you'll remember, many months ago I went against the head and shoulders pattern, predicting that it would not play out. I can't say that I was right in that call just yet. Invalidation comes if we were to move back above this green line, which is the neckline of that proposed head and shoulders pattern. And we definitely have not done that yet. Now, we got close as we touched our 200-day moving average on the 28th of March, but we were not able to break this whole area of confluence here, which is the 200-day and a couple ascending trend lines that I have. So in that regards, close is only good enough in horseshoes and hand grenades, right? That's how the saying goes, I believe. And so close does not cut it. And as a result, we hit our heads on that 200-day moving average and just kind of collapsed. Now, I also had a support zone drawn here, which I was hoping we would stay above at that point. But turns out I'm actually how do I say it, in antithetical or paradoxical way impressed and also more bullish because because that support zone, the bears were able to conquer that support zone and bring us down. Now, 80% is also a good drawback level. As you know, many times in Bitcoin history, we have retraced 80%. Now, this is just a mini retrace. This goes from March 14th to March 28th. And the level that we went up from March 14th to the 28th, we have retraced that. That's this purple line, which I had already drawn. I didn't draw that because that's where I had that already drawn in the chart many moons ago. And that level is at 39,300. Which is exactly 80% retracement, by the way. We hit that a couple times. We tried to conquer it, but could not get down. And so this kind of made me a little bit nervous because I don't want to test, as you know, that yearly strong support, this line that is ascending up here. Since January, I believe I counted it up one time, one video. Well, let's do it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 times we have tested this strong yearly support, which comes all the way back from October of 2019. So over almost 2.5 years ago, excuse me. Sorry, I just got something stuck in my throat, so I had to put you on mute. That's the thing about doing these videos live. A lot of people make the cuts and make their videos all look perfect. I don't have time for that. I'm just going to keep moving on here. All right, so where are we at? We're getting close to this yearly support, which makes me a little bit uncomfortable. On the plus side, we have not tested it yet. So that is definitely a bullish indicator. And we're continuing and finishing out all of the bear indicators, which are surprisingly, there's a lot of them. And there's more of them than bullish indicators. And the other one is this potentially, this move down, and then this bounce off of our 39.3, 80% retracement up to touch the 100-day could actually be a bear flag. And we could have a continuation pattern here, come right back down and actually test this yearly support again. That is bearish. You guys all know I do not want to see us test that support again. That we've hit that so many times, 17 times now on the daily, that if we continue to wrap away at that and test that line, it will eventually break. And my suspicion, I guess, is that if we hit that again here in the next few days and continue to wrap away, it will break this time. And so I don't want us going down there. I hope that this bear flag is not correct and that we continue this move up and we actually can, the bulls can conquer back that 100-day and 50-day and 0.618 Fibonacci territory. That's my hope, but it remains to be seen. All right, and thus the video. All right, now let's talk about some of the bullish indicators. First of all, before I forget, let's bring up this Glassnode chart here. This is something that I find very interesting and also indicative of a bullish behavior. We know that the whales are something we like to keep our eye on. In this case, this chart represents wallet sizes of over 10,000 Bitcoins. So these wallets have over 10,000 Bitcoin in them. That's represented by this orange line. And you can see that every time those wallets, the number of wallets having 10,000 or more Bitcoin in them has increased, we have had somewhat of a bull run. That's indicated by all of these lines here. And here we have another one. And here is what's happening again. All right. So we are having an accumulation phase in which the whales are buying your Bitcoin. Maybe not your Bitcoin, somebody's Bitcoin, and definitely not. The whales are not buying each other's Bitcoin. They're buying retailers' Bitcoin. Whenever that happens, it's indicative of a future bull run. So that's a good sign. All right. Now, the rest of them I had in my post here. We bounced off that 80-day Fibonacci. That's a good sign. Doesn't necessarily mean we will continue moving up, as I've indicated by this bear flag. But bouncing there and not testing our support is at least positive, right? It doesn't have to be bullish to be, or it doesn't have to be bullish to be positive. But it can be positive without being bullish. And it's a positive sign that we have not come down, retested that yearly support. All right. The other thing that I see, and I want to jump over there real quick since I'm on video, I can do this, is our dollar chart. Oh, so this morning I woke up and it was another green candle. And I'm like, this is getting ridiculous because we have 1, 2, 3, 4, 5, 6, 7, 8, 9. At that point, there were 10 green candles in a row. Rarely have I ever seen any chart with more than 9 green candles in a row, unless it's like uber bullish. And so I was like, this dollar is just continues to go. Now, at that point, this was a green candle. And I said, I do expect us to come down here and retest our previous resistance, which is now support. And it looks like the dollar is falling pretty rapidly here. That's good. And along with that, the VIX is coming down. That's good. So that's giving our markets a sort of a reprise, rest in the markets. And that will, when the dollar goes down that much and the VIX goes down that much, you know what the markets are doing, right? They're all going to be going up. And following that would be, of course, our crypto markets and the Bitcoin. So that is the last bullish sign that I wanted to give to us. That dollar dropping is going to give a little bit of a rest and maybe enough that we can pop back above these areas here, 50-day, 100-day, and 0.618 Fibonacci. And should that happen, then we, obviously I am becoming more bullish once again. Let's see, anything else I want to cover in this? I don't think so, not at this point. So let's jump to our outro and then I'll post the video here. In conclusion, whoa, there is one more thing. Let me jump back. All right, I didn't cover this in the post either. This is our RSI, and we are coming up into resistance that adds to the bear side, not the bull side. We need to watch that closely. I have a level here at 47, basically, on the RSI. We can conquer that, that's bullish. I imagine when we conquer 47, and if we conquer 47, it would be the same as conquering our 100-day or 50-day, one of those moving averages. All right, so that's something to watch as well. All right, so in conclusion, I want you all to stay cautious in this market. We're obviously indecisive in this zone, and as I've alluded to and even stated in many of my past videos, this whole area here, this red zone of FUD, I call it, could also be a larger bull flag to this head and shoulders pattern that I have drawn. We need to watch this closely. A test down here at our yearly support would be negative. Don't want to see that happen. But I'm hoping that this dollar gives us enough of a break that we can break up again that 50, 100, and 0.618 Fibonacci. All right, hope the video helps, guys. We will talk to you in the next one. Until then, peace, y'all.